Hello students, welcome to my class. This is Professor Vincent Osaya and this is the presentation of part 2 of chapter 4, completing the accounting cycle. In part 1, we left off by talking about classified balance sheet. We call it classified balance sheet because assets, liabilities are put into different groups. When we wrap up when we wrap up part 1, we talk about assets. Now, let's talk about liabilities. Here, liabilities are put into two different groups. We have current liabilities, we have long-term liabilities. Like we discussed earlier, current liabilities are companies' obligations that are due within 1 year or within the operating cycle of the company, whichever is longer. Here are some of the examples, okay? Accounts payable, salaries payables, unearned revenue. While long-term liabilities are companies' obligations that are due or that are to be paid or that do not need to be paid within a year or within the operating cycle. An example would be like a mortgage. A company purchase a property and have 20 years mortgage or 10 years mortgage. So here you have it in terms of the two groups or categories of current liabilities. Now, the stockholders' equity, which is the third section of the balance sheet, has two components. We have contributed capital, we have retained earnings. And here we say that it represents the stockholders' claim to the assets of the business. Now, so stockholders is whatever is left after the corporation has paid its liabilities. Let me go ahead and quickly demonstrate this for you in terms of how to read a balance sheet, okay? So now, assuming that this is a company, all right, and this is the balance sheet, you know, we have assets, we have liabilities, we have stockholders' equity. So what we are seeing here is if the company's total assets is $100 million and the company's obligations or liabilities, what they borrow from others, is $70 million. So clearly, as you can see, if the company sells everything that they have for $100 million and pay off everybody that they owe or every party that they owe for $70 million, so clearly stockholders' equity will be $30 million. Okay, don't forget the accounting equation, same thing here, which is assets equals to liability plus stockholders' equity. So the accounting equation elements consist of the balance sheet elements. Now, that being said, let me go ahead and explain this to you a little bit further so that you can appreciate how to understand or how to read and understand the balance sheet. If we are looking at a balance sheet of an individual like you, like you or I, so here is what the balance sheet would look like. Okay, we have assets, liabilities. Now, take a look at this. This is not part of the textbook. This is just extra. You didn't pay me to teach you this. Here we have assets, liabilities. If this is a personal balance sheet, a personal human being balance sheet, we don't call this stockholders' equity. Rather, we call this net worth. You must have heard this in the news or talking to people, and people will say, my net worth is $3 million, so on and so forth. So here you have it. If this is a personal balance sheet, if your total assets is $1.3 million and your liabilities or your obligations, what you owe people is $0.3 million. See, clearly the difference between 1.3 and 0.3 is $1 million. So we said that your net worth is $1 million. This is how we know who is a millionaire. A millionaire doesn't necessarily have to have $1 million in the bank. If all your assets is if the difference between your total liabilities and your total asset is $1.0 million or more, you are a millionaire. Again, this is what is left after after the creditors or your obligations are paid off. Again, this is also related to the accounting equation. Personally, we call it net worth. For a corporation, we call this third element stockholders equity. Now, moving along, let's take a look at a classified balance sheet here. All right. So here is an example of a classified balance sheet. You might not be able to see this clearly, but you have the benefit of your PowerPoint. As you can see, assets, liabilities are grouped into two categories: current assets, long-term assets, current liabilities, long-term liabilities. Moving along, let's take a look at objective 2. Use the worksheet to prepare financial statements. Now, first of all, what is a worksheet? It is very important for you to know this, okay? A worksheet is not a financial statement. We already talked about 3 main financial statements that we prepared, and that is basically everything that we are going to do in this class is directly and indirectly related to how to prepare financial statements. Okay, a worksheet is not a financial statement. That's the first thing you need to know. The question is, what is a worksheet? It is simply, a worksheet is a paper that consists of a bunch of columns and bunch of rows. Just like you have Excel. You know, that in computer we call it a spreadsheet. On paper we call it a worksheet. So here's an example: bunch of columns with bunch of rows. Computer Word says spreadsheet. On paper we call it worksheet. So the question is, what is a worksheet? A worksheet is simply a rough draft that we use to assemble bunch of information so that preparing our financial statements will be a whole lot easy. So now, that being said, the first 4 sections of the worksheet, we are going to go through the different sections of the worksheet. Section 5 talks about the income statement, section 6 balance sheet, and section 7 determine net income or net loss. Now listen to me carefully. This is important. I know when you get to this worksheet, it looks very busy, and you are likely to be overwhelmed with this bunch of data, bunch of information. Now, it is not as bad as it looks, okay? So when you get to this point and you are pretty tired, get up and take a break, all right? Go get some coffee, some cigarettes, or whatever you smoke. I'm not encouraging you to smoke now, but go ahead and take a break and come back and roll up your sleeves and go through this with fine-tooth comb. It is important for you to know this because you are going to have a lot of questions on your second examination that are directly and indirectly connected to the worksheet. So that being said, let's quickly go through the worksheet. Take a look at what happens here. The first column here consists of the account names. Where did we get the account names from? From the ledger. Remember, the ledger consists of different accounts, okay? For educational purposes, we call them T account. So after we post from the journal to the ledger, we determine the balance of each account. So these accounts are from the ledger. Then look at these two, the first 2 columns. we call this unadjusted trial balance. Remember, after journalizing, we post to the ledger. After posting to the ledger, we prepare unadjusted trial balance. One of the steps that we have to perform to prepare the financial statement. So this is the unadjusted trial balance, debit and credit column. Of course, as you know, the two columns have to be the same. All right? Now, let's take a look at the next two sets of columns. Adjustments. Remember in chapter 3, we talked about how to journalize adjustment or how to make adjustments, and we talked about the reason for making adjustment to some accounts, not every account. So we have already journalized those adjusting entries. We are not just plugging them into the adjustment two columns. So as you can see, take a look at this. Accounts receivable was adjusted by debiting that account, and we credit another account. So the account that we debited here was accounts receivable. It originally had a debit balance of 1,000, debit adjustment of 800. So if you add these two up, you are going to have $1,800. So the next two set of columns is titled adjusted trial balance. So for the adjusted trial balance, all we are doing is adding or subtracting figures on the adjustment two columns to the unadjusted trial balance for us to get the adjusted trial balance to get the adjusted trial balance figures. Look at this. Number one item, cash. Cash is one account that is not adjusted. All right. Remember we talked about that in chapter 3. So cash has a debit balance of 12,200, and we also extend it to the debit column of 12,200 on the adjusted trial balance. Accounts receivable 1,000 debit, it was adjusted, debit 800, we now have 1,800, so on and so forth. By the time we did that, by the time we are done with that extensions, ultimately the adjusted trial balance definitely has to be in balance. Now, after we are done with the adjusted trial balance, guess what? Preparing financial statements, like we said, it's going to be a whole lot easier if we did not use the worksheet. So look at the next two set of columns. We have income statement here, we have balance sheet here. So look at what we are doing here. From the adjusted trial balance, we are going to extract only two information from the adjusted trial balance into the income statement columns. What are the income statement consists of what? Revenues, expenses. So look at revenue, credit balance, we extend it to the credit column or the income statement. Look at all the expenses under the on the debit column. We extract them and import them into the debit column of income statement. By the time we are done with that, you need to catch this. This is important. You add the debit and credit columns of the income statement. Guess what? They are not the same. The only time they are going to be the same is if total revenues and expenses are the same. Usually, that is not the case. So in this case, the credit column has 17,000, the debit column has 8,000. So the difference between both of them, obviously, is what? Net income. If the debit column, which is total expenses, is more than the total credit column, of course, that would be expenses or total expenses exceeding total revenue, and that would be net loss. So in this case, the difference is $8,500, and that $8,500 is placed on the debit side. Why? To balance out the two columns. Then, look at, we're almost done. Now, from the adjusted trial balance, we are going to extend all the assets, liabilities, stockholders, equity items into the balance sheet. And by the time we are done with that, we calculate the balance. If you calculate the balance of the two columns, it will not be the same. Why? Because the net income has to be extended, in this case, to the credit column to balance out the two columns, or if it was a net loss, it will be on the debit side. On the second examination, of 20 multiple choice questions you have on the second examination, about 3 or 4 questions are related to the worksheet. So it is important for you to roll up your sleeves and understand the mechanism of the worksheet. You have to understand the in and out of the worksheet. Okay, don't let it scare you, because like I said, it is not as difficult as it looks. So this will be the conclusion of part 2 of chapter 4.